if I just see your numbers, FY25 we did 130 crore sales with a 9 crore PAT. And if I compare with that with one of the famous unlisted players, and we are coming in at 220 crores. So where do you see, because we are making profits and being online, so what things we are doing right, and rather than other players doing wrong, we are doing something right that gives us these numbers?
So we've been very lean.
Can you give me some ballpark figures of the TAM that we currently cater to?
See, overall the size of the market is almost $40 billion, which is almost 3 lakh crore.
Wow.
Okay. And out of this, 95% of the market is completely unorganized, which is you are purchasing from the wholesale mandis. The remaining 5% is which is organized. It comprises of people like Godrej, Real Good, or supermarkets, frozen chicken, different brands which are in more supermarket and modern trade
Correct.
stores, and also online.
Correct.
So which is just 1%. So what we are looking at is attempting to cater to the 95% of the market, which is slightly more unorganized. So working with them, organizing them, enabling them by becoming their supply chain partner is how we are looking to capture the market.
Back in 2015, we realized that the meat industry in the country is absolutely in shambles. The customer didn't really know where to buy, what to buy. The industry really needs help. That's why we built Zappfresh, a true farm-to-fork brand, ensuring you get the best produce at your doorstep, where there is no middlemen throughout the supply chain. We built our supply chain on quality, trust, and transparency. For farmers, it meant real change. Dignity came back to the business and also to the farmers, which was not there for centuries. We also ensure that there is more reliance on the local farmers. I think that community-led approach is very, very important to us. We also realize that women are not part of the ecosystem. So we are very proud to work with women farmers. Step by step, we built the business the right way, right from the first Delhi operation. We were not really after numbers. We were really focusing upon creating a very lean operation. This business can be built profitably, as we are the only company in the Indian market who is profitable. So we've proven to the entire world that India can sell meat, eat meat online without burning money. So IPO is really not the end of the story. I think we have just not even started yet. This is such a big problem and such a massive market. We are building a large group of food product portfolio which will impact every household with responsibility. We are not even a minuscule of what the size and the opportunity is, and that's where we feel that there is a lot to be done, and we are ready for it and we are coming for it.
Sir, can you please explain what Zappfresh is in a very simple manner so people could understand our entire business model?
Dhruv, Zappfresh is a fresh meat brand. We started in 2015 with an idea to organizing the entire meat ecosystem. We deal in poultry, goat meat, fish and seafood. The idea is to bring farm to fork produce directly at the doorstep of a customer. And you can buy through online, offline, different modes are there. Essentially, we are looking at simplifying buying meat in a very, very unorganized market in India.
Got it. So we just source it from the poultries.
That's
and
correct.
Process it and then directly sell through our brand.
Correct. That's
Perfect.
correct.
And where do you see the packaged meat market in India is still emerging? So like what challenges did you face while building trust among the customers?
So this is a very a decades old industry. People have been buying from local meat shops for way too long. There was a behavior of a certain kind. When we did our initial research, all our the customers were really jumping onto the solution and idea that if there is something well packaged to them coming with a lot of reliability and trust at their doorstep. We didn't face any kind of challenges from that point of view where customers have any trust issues. Once they tried the product, they came back more strongly because we were promising them a certain quality and also ensuring that the service levels are also at a certain level. See, when you buy from a local shop, he doesn't guarantee you anything. But in our case, if there is any kind of a problem or an issue, we are there to take care of.
Fair enough.
That kind of assurance is missing. It was missing in the industry earlier.
And you need to maintain your quality to retain that customers, because
Of course.
eventually it's a D2C as well as a B2B.
Absolutely. So we are operating on an omni-channel strategy, which means we sell to hotels, restaurants, and also D2C online. Everything, all distribution formats are getting catered. And because in every area, every distribution format, there are different nuances. For online, we've built the brand. Now it's a brand extension where retail and B2B, all of that comes in play.
And can you explain how your supply chain works, like from sourcing, processing to delivery? Like, how does it work in that particular supply chain?
So we work with the farmers directly. We work with women farmers, that too.
Okay.
Ensuring that their livelihood incomes are impacted and improved. And there's no middlemen in the entire supply chain. So the relationship is more direct in this way, which is able to control quality and price to a large extent. And then this live produce goes to a processor separately, which is ensuring the finished good, semi-finished good gets implemented there. And then we have our own processing units where we do sorting, grading, packaging, storage. From there it goes to the doorstep directly through a cold chain vehicle to the customers.
Fair enough. And which are the places that we operate currently, and where do we have our processing units?
So we are currently present in Bangalore, Bombay, and NCR. In the last 2 years, we've acquired 2 companies to start these new markets, which is Bombay and Bangalore. In Bangalore, we have 2 setups. In Bombay, we have 1 setup, and in Gurgaon, we also have another setup. A total of 4 setups, which are currently there.
And you said you've acquired brands. So you've acquired brands like Bonsaro and Dr. Meat.
That's correct.
These are the 2 brands. So what strategic goals were behind these acquisitions, and how has it helped in your business? And how do you acquire? What's the strategy that how will it help? ये मेरे business को किधर से बढ़ाएगा, या नए city में जाना है तो कितना help करेगा? Like, what are the things that you think while acquiring these brands?
So it's a growth hack which we identified will be very helpful from a faster scale up point of view, where in India, there are different behaviors, different ecosystems in every geography. Like the way Bombay operates, the way Bangalore operates, very different. So we thought that it'll be always better to work with fellow entrepreneurs. So it is more of acqui-hiring strategy, where we onboard the founders to build with us, be part of the umbrella Zappfresh, and then whatever learnings they have learned and their experiences become also helpful for the overall strategy of our business, and also regional strategies where they understand and have that nuances of that market very well executed. So we look at a certain pedigree, seasoned experience which that entrepreneur has built in that market, which helps a lot to kickstart the business faster. And then be part of a larger growth story is how we are looking at it.
Fair enough. Sir, one more thing, कितना बड़ा TAM होगा ये? As in, each segment is mammoth eventually. Eggs is mammoth, chicken, meat. So can you give me some ballpark figures of the TAM that we currently cater to?
See, overall the size of the market is almost $40 billion, which is almost 3 lakh crore.
Wow.
Okay, and out of this, 95% of the market is completely unorganized, which is you are purchasing from the wholesale mandis. The remaining 5% is which is organized. It comprises of people like Godrej, Real Good, or supermarkets, frozen chicken, different brands which are in more supermarket and modern trade
Correct.
stores, and also online.
Correct.
So which is just 1%. So what we are looking at is attempting to cater to the 95% of the market, which is slightly more unorganized. So working with them, organizing them, enabling them by becoming their supply chain partner is how we are looking to capture the market.
So when you say you want to work with the unorganized market, so suppose you only supply to the local shops and eventually you get that branding under the name of Zappfresh.
Correct. That's correct.
Okay, so that is how you can capture the local market
That's
as well
correct.
and their loyalty.
That's correct.
Okay, fair enough. And of course, they will have some kind of incentive. They will have a better incentive to work with you rather than working alone.
That's correct.
Wow, got it. So that is a big market that we can capture.
Absolutely.
And when we say we do chicken, meat, fish, what would be the product category wise, how much revenue per category right now, as in terms of percentage?
So 55 to 60% is chicken, about 22% is goat meat, and then we have fish, which is about 16 to 17%.
Okay. And margin wise?
Margin wise, chicken, because the volumes are higher, so economies of scale is better there. So we operate at better margins on that. And then comes fish, the second, and mutton, the third.
And where do you think, although we are operating at these levels, where do you think which is the best product category we want to cater more?
So we think that India is largely a chicken eating population at large, but we do have different behaviors and different consumption patterns in different geographies. Like if you see West Bengal mostly, so a lot of fish gets consumed there. You look at Bihar, there is a lot of mutton, contribution there. So like that, geography wise, the contribution changes. So that's one thing which you have to be mindful of, that your contribution goes with the geographic behavior as well. However, we see that for us, business strategy wise, fish is also something which is of high potential, both from consumption and also from profitability. So we want to emphasize more on fish as we come closer to ending the year, and looking at building the contribution of fish to at least 35-40%. So that's the goal.
And does our strategy remain the same, that we acquire like brands, nurture them, and eventually it becomes our own umbrella, that these are the brands that we are associated with?
Yes, you should think of us like a small ITC, where we started with one category. They started with tobacco. We started with meats.
Correct.
And then diversified into other complementing businesses in the F&B area.
Okay.
So we are very, very ambitious overall and committed to food as a sector. And we believe that there are enough problems in the sector and opportunities which can be, tackled in a very, very customized way. That different brands, different geographies. So be very agile and dynamic, and look at every business which we acquire with a very different lens, not necessarily being interdependent on each other.
And in the F&B space, when you say, what other food segments you might be eyeing?
So we are looking at ready to cook, ready to eat as umbrella categories. Under that, there are many subcategories, like there are masala, spices, frozen products, ambient products, packaged, exports. Enough of opportunity is there. But as I said, that for us, it's just not the potential of the business, but also the team which is getting onboarded, the experience of that team, the geography, various other parameters are there for us to evaluate before we take a call that we want to do this. So it's a very rigorous process which we go through, and we spend a lot of time with the promoters and the founders to first identify vision alignment, and then move forward on the business strategy.
Fair enough. And so tier 2 and tier 3 are emerging markets. So how do you reach those markets beyond the metro cities that we are currently catering to?
So every market will have a differential strategy. as I said, both from a customer understanding point of view and the consumption point of view. That in some markets there is fish which is eaten more. So you have to build, that kind of a supply chain ecosystem and integration. And in some markets, online is very less. So you have to focus on offline more. So tier 2 and tier 3, according to us, are very apt for an offline penetration, which will mean that you will have to be more closer to them from a household point of view, like you have penetration at a retail operations where you have more stores, you have more supply chain enabling different restaurants, hotels, like that. So it's a very dynamic strategy. Somewhere online penetrates more and somewhere offline will take the lead.
And according to you, how much of the market will be online versus offline? Because in the last few years, because of brands coming in, a lot of money being pumped into, a VC money getting into brands, one of the big players spending a lot of money, but I don't feel that a lot has been done, that money has not been, the resources have not been spent in a way that, the results have not come, that the online has flourished to a level. So where do you think that online versus offline, where is your strategy coming in?
So online is very small, it's, as I said, that it's just 1% of the total market. And, some of the players have, bet a little too much on focusing just online. Whereas our strategy from day one, since we started Dhruv in 2015, has always been omnichannel, where we never ever relied solely on online. It is a significant portion of our volumes, but we've always believed on complementing distribution strategies which create more synergies internally to do different level of operational capabilities get harnessed in different ways. And our thought process is very FMCG like. We are not thinking online type. Like in FMCG, you would see, again, I'll give an example of ITC, that they're selling to different markets different products, including exports. They work with farmers as well. Their eChopal as an initiative where they have a community-led approach, working and enabling these local farmers. Then they are looking at packaged in MT, modern trade. Tobacco is all general trade mostly, built on that backbone. So I'm saying that they do have an online marketplace also, or an aggregation of sorts. Then they are also into institutional sales. So I think that's the only way to be successful and profitable in India. Is our strategy and our thought process when it comes to food as a market. It, according to us, if you are owning the entire value chain and not operating like a marketplace or an aggregator, you have to have more diversified and omni-channel approach. And that's what is the inherent nature of the industry, which is how we are following.
Fair enough. Emphasizing on the previous question, if I just see your numbers, FY25 we did 130 crore sales with a 9 crore PAT. And if I compare with one of the famous unlisted players, Licious did 600 crores top line and they burned around 400 crores. And the last round was raised at 10,000 crores market, 10,000 crores. And we are coming in at 220 crores. So where do you see, because we are making profits and being online, so what things we are doing right, and rather than other players doing wrong, we are doing something right that gives us these numbers?
So we've been very lean as an operation, even at a corporate level. We've always believed that till the time we crack the playbook in one city, we would not jump cities on whims and fancies, or be very impressionable to what the market is moving like. Okay, we've been believing at our core strategy of being fundamentally rooted and operating through that thought process. We have somehow been able to I would say efficiently build the online business. And once we became profitable in one city is when we branched out to another city. That's one, strategy which has worked. The other strategy is that we've not raised too much capital.
Correct.
Okay, because most of the startups we've seen raise too much and then they are vomiting that money out. So that is something which we've always been nimble in every area.
Correct.
If we take too much money, then there is more pressure to burn it and to chase growth and then not really be mindful of your bottom line.
Correct.
So you keep yourself hungry and then you run faster. I would say
No,
that way.
it's more of efficient use of resources from your side to reach at this stage.
Of course.
Because still at this stage, it is very difficult because that you have that time, you have that opportunity, but still players are not able to crack it.
Right.
And there is something that you have cracked it, you have found some steps, right, which has led to this particular.
So Dhruv, those steps are basically the fundamentals of supply chain. In meat as a category, what we've understood is that demand is not a problem. I've already told you the size of the market. Okay? The market is not going anywhere. It's the supply chain. If your numbers on the supply chain are and the processes and controls are in place, then you're ready for growth. Okay, that has also worked well with us. So till the time we have understanding on the cost and also confidence on the supply chain scalability, we don't go out and just do it for the heck of it.
Got it.
That we want to acquire customers, we want to acquire markets and chase revenue. So we'll fix everything simultaneously or later is not the thought process. Also has helped us a lot.
You focused on the core problem that if supply chain is solved, demand is already there.
Correct.
Demand is not a problem.
Yes.
If you can give a good quality product with a right set of customers, you'll always win in this market.
Yes. And at the right price.
At the right price. Fair enough. And what would be our pricing in comparison to some big players? Like, is there any differentiation or premiumization?
We are more value oriented. We want to match the quality and the price, together. We don't want to overprice ourselves or underprice ourselves. So our everything from our pricing strategy actually comes from our profitability, fundamentals, that at what margins and what profits we want to operate at, rather than looking at only what the competition is charging. But however, since you've asked this question, we are about 10 to 15% lesser than the immediate competition, and then we have some indirect competition with the other local meat shops, etc. With them we'll be about 20% higher. So that's the broad difference.
And do we plan, other than the new products we are thinking, apart from that, new geographical locations that you might be targeting, that these are the places that we should capture, or just enter and you think you'll be able to capture it fast?
I think South is a very high meat consumption market. So we've just started Bangalore, hardly a couple of years back. We believe that market can easily do 4x of what we're doing today.
Just cutting you, if you started 2 years back, what were the numbers in comparison to the other markets? So North versus South you did?
Yeah, so today for us, South stands almost 40-50%, which is within 2 years.
Within 2 years?
Yes. So, and that's what I'm saying, that the promise in South is immense. We are very, very committed to that market. So you may see new geographies, but in the South market. And in the future, we would be launching and expanding to new markets surrounding Bangalore. So other than Bangalore, it could be Hyderabad, Chennai, Kerala. Those other markets are on our mind, which are more faster scale-ups and will also have a healthy growth.
Fair enough. Talking about one of the important questions to this conversation, you are IPO bound. So I think we are expecting your IPO in the last week of September. So how much funds are we raising, and what would be the use of those funds?
We are raising about 60 crores. It's all primary. There is no OFS.
Wow.
We are looking at mainly capex and working capital. Those are the biggest chunk for the utilization, and some part is for marketing and general corporate expenses, and a small kitty for acquisitions.
The surprising factor is there is no OFS, because eventually when it's more of funding, we've taken less funding because we have elite investors on our pre-IPO list. That is Dabur Family Office, Hindustan Media Ventures is one of the investors. But it's surprising that there's no OFS factor, because as you see, very big players raising so much money. We've raised only few funds, but there's no OFS. What was the reason behind that? As in, is there any thought process behind it?
I believe that we're just getting started. This valuation is peanuts according to me.
Got it.
So I'm really aspiring for a bigger valuation jump, and of course business growth.
Correct.
So at the right time, I will definitely feel that maybe OFS will make sense, but definitely not what we are trending at in terms of valuation.
Not aligning right now.
Not at all.
Got it. And we've spoken a lot about the opportunities, what things we have done right, but what things we have done wrong and we have overcome them, and what are the challenges you foresee from here?
I think today, hiring is a big challenge. We've hired some, non-aligned or the right people didn't really, join us. So that was one problem. So we had to get rid of them and look for the right fit, because this is a new category. Even hiring, meat experts, there is nobody in the country you can, think about a meat expert. So that capability itself is missing in the country. So there's a lot of that skill gap which we feel has been the biggest challenge.
Correct.
And the way we have been able to solve it is being very cautious and picky, and not really hiring anybody and everybody. And also our aqua hiring strategy is in sync with that.
If you could explain that in a simple manner.
So when we acquire a brand, we get the promoters commit to a long-term milestone situation where their gains and our gains are aligned. So that ways we are able to get their skin in the game, so that they're motivated to deliver. And it's a very delivery-oriented approach rather than we're just cashing out somebody. So that is something which ensures that we work with the right set of people, and entrepreneurs more so, because those are built differently.
Fair enough.
As compared to fresh graduate, according to me.
And any mistake that we did in the past, and now we've overcome to a level that we don't feel that we'll ever face this problem, as in the entire journey, if there is.
See, we've learned very hard lessons on supply chain, because it's a perishable product. So there is a lot of inventory challenges, which we went through earlier. A lot of wastages or, other leakages, in the process, which, because we've fixed those processes and controls, we're very proud of those fundamentals today, that that whatever business we do, we're not going to be burning money. I think that metrics for us on operational efficiency wasn't there earlier, and we've suffered a lot because of that. And some of the other players, actually that's one of the entry barriers in the category.
Correct.
So biggest learning and milestone, I think, has been that.
Great. Sir, you've explained the business model very well. I think I had a more understanding because I researched a lot about this category, but now it's more of a clarity. One last question is that what advice would you give to investors or anyone who's watching this video who's curious about investing in the packaged meat industry, as in this is a new company in the SME space. There's no company, as in especially in the SME segment.
No, even there's no company which is even in the main board.
In the main board.
So we are the first D2C food brand to be listed.
Correct. So that itself is a big achievement, I'll be very honest. Still, what advice would you give to someone investing, who's someone, who's cautiously just seeing whether to invest or not?
I would really want them to look at the FMCG, sector, okay? Because this is exactly similar. There is very less other, non-similarities. the way FMCG stocks are operating, I think the gains are going to be slightly similar. They're more long-term bets. They're more patient investments. So this is going to be, I think, one of your, long-term investments which are not very fluctuating, more steady. Is if you are more steady and stable, then I think this is the right stock for you.
But with a low base, the growth prospect is also very
Yes,
high.
of course, because the entry point and the potential and the way we have been valued today is very attractive. The gains in long term could be multifold. So I think this is the right time to enter and then stay the course for the next few years, and you make the most of it. And essentially, we aim to become a very large conglomerate with varied interest in different product categories, becoming a more pan India and even an MNC over a period of time.
I think it's the right time to bloom for Zappfresh.
Absolutely correct. We are absolutely ready and completely in control.
Fair enough. So thank you for just coming to us and like just participating for this particular interaction, and we look forward to this particular IPO, sir.
Thank you so much,
and all the
Dhruv.
best.
It's been a pleasure talking to you.
Thank you.